Let me tell you the secret that has led to my goal. My strength lies solely in my tenacity. Louis Pasteur. And of course, tenacity means the ability to grip something, to be committed to something, to hold on to something firmly. And we want you to have the tenacity that it takes to master these charts. How do you do that? Well, my friends, 10 to 15 minutes a day is a good start. Spending it with us, following these charts on a daily basis, practice trading all that you can. Want to step it up a level? You can, of course, become a Patreon supporter. We always appreciate that. We have a Patreon live Q&A call-in. Those of you want to know what that's about? Well, we have our Patreon members call us once a month. We talk about all the stuff that we talk about here on the program. We get into it a little more in depth. Of course, we are an education firm. We're not a stock calling service. We want you to practice with us, read books, study, do all that you have to do, but follow these markets on a daily basis. People ask, how long does it take until I master this material? Let me tell you, I've been working on this for years and years. I love studying it. I love practicing it. I love what I do, and every day I feel like I learn more and more things. But in order to get started, you've got to start sometime. Start now. Commit yourself. Be like Louis Pasteur and realize the secret that leads you to your goal is your tenacity, your desire, your commitment on a daily basis. Things will go well for a while in your practice trades. They may go badly for a while, but again, continue to practice to show yourself approved. I love using that analogy. How do you get to Carnegie Hall? Practice. How do you master this material? Practice. So many places out there that make everything so complicated. We break it down to the goal. The goal is to accurately follow price movement, to do successful practice trade after successful practice trade. And you only do that by committing yourself to it and doing it. You will see in the show notes every day for free. There's a PDF that you can print out, the weekly market review, the daily market review, and, the weekly, you've got daily and weekly and trade worksheets. And I want you to fill those out. Every time you do a practice trade, you fill out that trade worksheet. It gives you places where you can put in all of the information, why you got in, what you were thinking through the course of the trade, what the indicators were doing, why you stayed in, why you got out, and different formulas as to what you're doing and why. Everything that we do here ends up being individualized. The more you do it, the more you'll develop your own way of doing things, and that's what you want to do, my friends. So commit yourself now. Let's jump into these markets. A very fascinating week we've had. Stocks are down for the day. Gold is down. Bonds are up. And we've got some funky things going on in this chart as we come out of the summer doldrums, come into fall, into the fall-winter trading zone. And things are still sort of transitioning and shaking out. Look what we've had happen with the S&P 500. Bounced off the red signal line. We did not have a crossover. And we have it moving back away, heading down. Now that this week has drawn, we're going to actually move our trend line, and we're going to try to reestablish it now that we have a new week. I prefer to reestablish it on another solid red candle, but we'll do what we can with what we have. We see the derivative oscillator is still negative. That's good. Price percent oscillator is negative. Go to the 2-day chart. What do we see there? My friends, we had at the end of the day, if you were paying attention, a crossover going down. Now again, it's not confirmed yet. Why? Because it's the first day of this latest 2-day candle, but it is trying to cross over. We're going to pay close and strict attention to that on Monday at the close of the market to see if it is confirmed. If it is, of course, we will redraw our vertical crossover on the 2-day chart going down. We'll bring the arrow over, rotate it over. And of course, if it is going down at the close of the market on Monday, then those of you who want to look on our method of doing a 2-day entry point, you can sure look around 355 for a jumping in point on a practice trade going down. Remember, the inverse fund that you will practice with is SH. That is the ProShares short of the S&P 500. It goes up when the S&P 500 goes down. If you don't have a good platform to practice trade on, then guess what you do? You simply write down the price on the S&P 500 and then track how far down it goes. Easy enough to do. You can just write it down. We also have a training in the trainings at YouTube and online about how to use freestockcharts.com and TC2000 to practice trade and to keep up with your entry points and your profits. Simply the time you put that trade in, it marks it in your notes to the left of the screen and it will track it for you. We've got a training on that. I'll add that at the end of today's training. So it's an easy tracking method. You'll see that. And I want you to practice that also. The good news is price percent oscillator is crossing over right now, and it can pull back through if it's a big up day on Monday. Derivative oscillators down also. Lastly, we go to the 4-hour chart. It's been trundling down for quite a while, my friends. Crossed over going down back on the 16th, went up a little bit, and then has pretty much been going down since it started to roll over hard back on the 20th of September. And of course, big down at the end of the afternoon, plumbed all the way down to a low of 293.69. High during the day, during the afternoon, I guess, was 296.80. So again, whew, that's a lot of movement right there. But again, it is the S&P 500. So keep your eye on the prize. Look out Monday afternoon. We're going to go back to the weekly chart and go to the Qs. Qs down for the day 1.24%. I don't think I mentioned S&P down 0.54%, so a little over 0.5%. Now, we see that we have also, still in a confirmed down move, never crossed over, not even really bounced. Well, I guess you could say it's sort of never hit the red signal line to bounce off of, but it is pulling away. Derivative oscillator still losing a little bit of energy. But for the week, we have a down candle. We would call it some type of spinning top. It's a decent sized candle. Does have a wick on the top. So again, not portending super strong down movement, but it is a down candle with a longer wick on the bottom. Go from there to the 2-day chart. And remember, we had that 2-day crossover yesterday. I actually entered a practice trade on that and noted the entry point was 189.56 at 3:55 on Thursday, the 26th of September. And of course, from 189.56, the low for the day, 185.75. So again, that has so far done all right. It's done all right. So we'll continue to watch that down trade. And again, that's using our 2-day entry point when you have a crossover that's going to be confirmed at the end of the day, right there before the day ends at 3:55, looking at a jumping in point for a practice trade. What do we see on the 4-hour chart? Spinning top in the morning on Friday, and then plumbing down, deep, hard down, going below the lower low, all the way back on the 25th, Wednesday morning. And of course, plumbed on down deeper. Again, so nice to see how those vertical crossovers on the 2-day and the weekly tend to work over and over again. So I want you to practice that. See that in action. Learn that. Now, we're going to go from stocks to bonds. Bonds up for the day 0.25%. And this is where it gets weird, my friends. I said it's a weird time of year. Okay, we have stocks going down, right? You would think bonds would be going up, right? Well, bonds just crossed over on the weekly chart, going down. Yes, going down. It is a weekly vertical crossover going down on bonds along with stocks in a confirmed crossover going down. Do I like that? I don't like that. Why? Because typically bonds are a safe haven, and when bonds are going down, stocks are going up and vice versa. We're not seeing that happen, but that's what we're seeing, so that's what we're paying attention to. So what is our rule for practice trading? It is look for a jumping in point, if there is one, On Monday morning, I know that some of you practiced by jumping in on a down move at the end of the day today. We'll also track that for practice trades, and we'll see how things work. So again, those of you who didn't, look for a jumping in point Monday morning around 10:30 after idiot hour ends. Remember, when the market first opens, market makers have a lot of control over things. And that's where the people have put in market orders to buy or sell. Market maker has a lot of control on what to set, and they typically say in it, not so good a point, buy you out at not so good a point. So we wait until the market's shaken out at 10:30 and then look for an entry point on your practice trade. So we'll see how that goes. We go and we do see price percent oscillators crossed over, derivative oscillators gained a lot of downward momentum. We go to the 2-day chart. This is where it's funky, friends. Still in a confirmed down move, but heck, it moved up for 6 days and then sideways now for 3 days. So quite strange. Again, we'll look, see what there is to see and what there is to learn. Remember, we're just practice trading. This isn't real money. We want to practice this stuff and see how it works. Check out what's going on with the 4-hour chart. It peaked all the way back after many days of up movement on Tuesday in the afternoon on the 24th of September, dropped on the 25th, and then on the 26th, really since the 25th, has been sliding sideways, so on Thursday and Friday. So we'll keep our eye on things. The price percent oscillator is about flat. Derivative oscillators losing momentum, still positive though. So let's see how things go. Keep our eye on it. Want to hear back from you guys as to how well the practice trades go for you with this weekly vertical crossover. Now, they have worked time and time again on this weekly chart for us. Let's just see how things go with this new changeover. Going to be interesting, friends. Going to be very, very interesting. We'll see just how good that weekly vertical crossover continues to be. Going now to gold. Gold down for the day, 0.51%, but we have two green spinning tops. Well, one atop, this last one, yeah, it's almost a doji. So again, lots of indecision, tending up supposedly on the Heikin-Ashi candlesticks, but we have a confirmed crossover going down on gold. How far back do we have to go since gold started moving up? Say June of 2019, early June. Well, we have a confirmed crossover at this point. Now, again, it's weak. If it's a huge up week for gold, it could pull right through. And you know what? That would be fine with me, my friends. If it wants to, that'll make it easier to practice trade. I love bounce-offs. If that occurs, then of course we'll change our tune. But for the time being, we're going to dance with who brung us. And it is the weekly vertical crossover that has done that. Derivative oscillators gained a lot of downward momentum. Price percent oscillator has officially crossed over, going down on gold. And it's been a long time coming. 2-day chart heading down. The first day of this latest 2-day candle down pretty strong. So we'll see how this finishes up on Monday also. So again, very interesting. Go to the 4-hour chart. Down big in the morning, bit of a recovery in the afternoon, still for the day, down 0.51%. We had that crossover on the 4-hour chart in the afternoon on Thursday, the 26th. So, my friends, we've got a number of things to watch. Want you to consider practice trading, of course. Gold going down. Bonds going down. The Qs, we've already jumped into our 2-day practice crossover going down. Jumped into that yesterday afternoon. Those of you who did not, well, of course, what can you do? You can wait for a pullback on that 4-hour chart and a potential jumping in point when and if that happens. And then lastly, we go to the S&P 500, pulling away on the weekly chart from the red signal line. Look at that 2-day chart. Waiting to see if there's a confirmed crossover going down. If there is, then of course we've got a jumping in point there. That's where we are, my friends, as we end the day on Friday. Very interesting charts with some dichotomies there that cannot be explained except the market will do what the market will do. Our job is to trend follow. That's what we do. We don't tell the market what to do. It tells us what to do. We set up rules. We obey those rules until they don't work anymore. Complexity theory helps teach us that it is a dynamic marketplace. It changes all the time. We do what works until it doesn't work anymore, and then we do something different. Does that sound confusing? It's not. Follow us here every day. See what we do, understand what we do, and love it. And again, tenacity. Stay with it. You can do this. You can do this. If you don't have the book, we got an autographed copy waiting for you. Encourage you to purchase your own copy. Follow the link in the show notes. If you live overseas, we'll send you one in the mail. Email us, cw@chartingwealth.com. Tell us where we'll get your email address. We'll send you a PayPal invoice for our overseas listeners, and we'll get it out to you. Don't forget, Patreon members, this Wednesday, we have our live Q&A call-in. Please send me questions you have. We'll be delving into all sorts of stuff. We'll get some in-depth stuff back into the price percent oscillator and just all sorts of good things like we always do. Always love having the Patreon members with you. If you're not a Patreon member and want to become one, look for the link in the show notes. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.